So what types of loans are we seeing in today's market? I'm Albert Pavon from the Pavon team, and welcome back to our channel. I wanted to discuss with you guys in today's market in 2023, what are the types of loans that we're seeing on the properties that we're selling? Now, with a lot of loans out there, you have a bunch of options. So you have an FHA loan that allows you to start at 3.5% down. It lets you have a little bit higher debt and a lower credit score. That's more designed for a first-time home buyer. So we see those loans on our properties that are probably under the $400,000 range. And anything that we're seeing from a $400,000 to an $800,000, we're seeing them around a 5 to 10% down and our typical 20% down. So let's just cover a little bit about the different down payments in those loans. So the FHA with the 3.5% down, I just want you to understand that you're gonna have mortgage insurance for the life of that loan. If you were to go in with like a 5% down, there's gonna be a certain point when you have about 20% equity. Now, warning, you should reach out to the bank and ask them the full criteria of how to get rid of mortgage insurance. But most of them, they wanna see that you have 20% equity and that you haven't missed a payment for at least 24 months, that you've always been on time. With the 5% loan and the 10% loan, or even 15% down, you're gonna have mortgage insurance with that loan. When the people put 20% down, you're gonna be able to not pay the mortgage insurance on the property, and you'll also have the option of not having to put your taxes and insurance in the escrow account for that. So meaning, when you're making a payment, let's say on anything under 20%, right? You make one payment, that one payment is gonna go out to a bunch of, let's call them parties. They're gonna go out to a bunch of different areas. So you have to, they're building savings account for you if you wanna look at it that way. So one part would be to principal, one part would be to interest, one part would be to make sure you have to pay enough for insurance when the bill comes out. And the other part would be to make sure that you could pay for taxes when that bill comes out. And on top of that, the fifth part that payment will go out to would be your mortgage insurance. But in today's market, we're seeing a lot of properties sell with as little as 3.5% down to 5% down. We're not really seeing that 3% loan right now. They're having a tendency to pay a little bit higher interest rate. With the FHA loan, you do have, you are gonna pay a little bit less interest rate as well. And interest rate's gonna be tied into the credit score that you have. Now, as we notice a market shifting, we notice that these lenders are becoming a little bit more flexible, right? Interest rates coming down a little bit less, the loan amounts going up a little bit higher. So if you are in the market as a buyer, I would tell you, let's talk to the right lender, let's get you qualified correctly, and let's give you the power to make the right decision for you and your family to make sure that you're purchasing at a comfortable payment in today's market. I know there's a lot to cover in this, and please, you can go back and see previous videos on it. I just want to empower you to make sure that you're making a smart decision in today's market on the right home. So I hope you're enjoying the videos. Don't forget to subscribe. Thank you so much for watching. I'm looking forward to reading the comments that you leave. See you on the next one.